In July, the CPI inflation, which essentially measures retail inflation in the country, surprised everyone by surging to a rather high level of 7.44%. This marked a 15-month high. However, in August, the retail inflation rate eased slightly, coming down to 6.83% from the previous month's 7.44% and was even below the market predictions of 7%. But the inflation rate of 6.83% is still above the RBI's upper tolerance limit of 6%. And this marks the second consecutive month where it's above the limit. Now let's talk about the factors that drove the inflation. Vegetable inflation was a big contributing factor in the overall consumer price basket, shooting up about 26.1% year over year. Cereals and pulses were also other major contributing factors. On a positive note, however, there's been an easing of core inflation, which is part of retail inflation that does not include food and oil, which fell to about 4.9%. While inflation has shown some signs of easing in August, there are several upside risks. The outlook for food inflation remains uncertain, particularly due to an uneven monsoon. And then there's this issue of rising oil prices, with crude oil crossing about $90 per barrel. Now, the RBI itself expects more upward pressure in the future. In fact, they've recently revised their inflation target for the current fiscal year, increasing it up to 5.4% from the previous 5.1%. So while there are some positive signs, it's clear that inflation still remains a concern. Turning our attention to the Industrial Production Index in India. The IIP is an index that tracks manufacturing activity across various sectors of the economy. And it's an indicator of the overall economic health and activity levels in a country. Now, in July, the IIP showed a rebound, registering a growth of 5.7%. This was a noticeable improvement from the 3-month low of 3.8% recorded in June. When we break down this growth, we see that the mining and electricity sectors played a significant role in supporting this overall growth. However, the improvement in manufacturing is also encouraging. The performance of the infrastructure and construction goods segment has been consistently robust, showing an impressive rise of 11.4% in July. Now, this segment has maintained double-digit growth for 4 consecutive months. The strong performance can be attributed to factors such as the central government's capex push and rising capacity utilization levels. When we take a close look at the consumer goods segment, it's a bit of a mixed bag here. On one hand, consumer durables output continued to contract. However, the non-durables output saw a rebound, indicating some positive consumer sentiment in certain areas. The automotive stocks in India have been going through an uneven and bumpy course in the last 2 days. This follows the announcement of the Transport Minister, Nitin Gadkari, that he might consider proposing to the Finance Minister an additional 10% GST to be imposed on diesel-run vehicles as pollution tax. Now, the reason behind the pollution tax is quite simple. It is for consumers to move away from fuels such as petrol and diesel and embrace cleaner and greener alternative fuels. However, the minister later issued a clarification and said that there is no such proposal currently under active consideration by the government, but he also said that it is imperative to actively embrace cleaner and greener alternative fuels. Now, the government already imposes a 28% tax on diesel cars plus an additional cess depending on the engine capacity, taking the total tax rate to almost 50%. Now, with a further increase in taxation on diesel vehicles, it will significantly impact sales, further given that the tax incidence on this segment is already high. Hence, the auto stocks took a hit. Though the additional pollution tax of 10% is not actively in consideration, it aligns with the broader goal to reduce greenhouse gas emissions, along with the larger stance of achieving net zero emissions by 2070. Having said that, this is me, Merlin Zana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.